It's Mira Business FM. It's the morning drive. Good morning. My name's Tim Elliott. It is very easy to watch us, to listen to us, all forms of social media. You can watch us on the website mirabusiness.fm. That's where you can find us. Contact us, info@mira.fm and whatsapp.mira.fm will find us if you want to contact us in the studio. Now, the UAE is often referred to as a hub by many, as a hub for business, for travel, business travel, gold. The nation's fast becoming a rising hub for global finance. Now, in this episode, in our kind of ad hoc series with guests, conversations, we look at financial market basics, and we're joined by Sergey Lyalin, who is the founder of CBonds, to talk about bonds and about what the bonds market means for jobs, for savings, for opportunities, I guess, across the region. Sergey, it's a pleasure to have you in the studio. Hello, good morning.
Good morning.
Good to have you here. So look, for people who don't follow, global markets every day, don't really have a great grasp on, financial vernacular, vocabulary. What exactly are bonds, and why should we care about bonds?
Well, actually, bonds are quite simple. There are basically two main instruments traded in financial markets. One is equity, one is a bond. So equity means a share you have in a company, and bond means a debt. So like a company needs, let's say, $1 million, and it issue bonds. Everyone nominated $1,000, and let's say 1,000 of buyers buy these bonds, and every year you are paid what is called coupon, which means interest on your bond, like let's say 5% and as a maturity, let's say 5 years, you are redeemed, so your money is paid back. So essentially, it's a kind of debt.
Yeah, I mean, bonds are used by, companies, states, governments to finance, the big stuff, aren't they? They're used to finance projects, operations. So owners of bonds you hold a debt, so you're, creditors, really,
Absolutely,
of the
yes.
issuer. So they're kind of like an IOU kind of statement.
Yes, that's it.
Yeah, okay. You founded CBonds, over 20 years ago, 25 years ago?
Yeah, almost.
Okay, you've been in Dubai here for a few years now, but when you founded the company, what was the problem that you were trying to solve? What was the thinking when you thought, right, this is what I need to do?
Yeah, thank you for the question. Actually, the difference between bond market and equity market is that bonds are much less transparent. So equities are typically traded on stock exchanges, and it's very easy to find the information about an equity. But it was not, and it is still not the case with bonds. They are typically traded OTC, so it's much more difficult to find the information. What is the price of a bond? What is the yield of a bond? What is the rating of a bond? So the idea of building CBonds was to increase and to bring transparency to bond market, so that and historically, bond market was, and to a large extent, it still is a place where big institution operates. So they use well-known data platform like, let's say, Bloomberg, Refinitiv, but the price of such a platform is too high, and it's not okay for small size institutions or even individuals to connect to such platforms. So CBonds was built to bring more transparency and to make bond information available to broader audience.
Well, information is power. You said something there, OTC, bonds are traded OTC. What do you mean by that? That's over the counter.
Absolutely,
is
yes.
What you mean.
Yes.
So what does that effectively mean?
Well, it means that there are brokers, they have bond desks, so they place the information where they trade on different platforms like Bloomberg, like CBonds as well, and then they make phone calls. Or there are some, now, of course, there are some electronic platform, but it is still not exactly a way like stock exchange where everything is crystal clear.
Okay. Um, how do you impact investors these days? What you formed with the idea of more transparency to offer people the information. How do your clients these days feel?
Well, so what our clients use CBonds is mainly for screening for bonds. Like we have an excellent opportunities to find what bonds fits them. Like depending on credit rating of a bond, so how secure is invested in that or that bond, duration of bond, which means what is the to maturity, the yield of a bond, of course, and on all the other different characteristics. So we provide an excellent opportunity for searching for bonds.
Okay. In the Islamic world, we have what's known as the Sukuk,
Yeah.
which is emerged in the late 20th century. I think in Malaysia or perhaps in Indonesia, it's a Sharia-compliant alternative to conventional bonds. They're structured slightly differently in that, you're paid a coupon, I guess, which is based on an interest, and in Islam, that's not the way it works. But they're very similar instruments in lots of ways, aren't they?
Yes, you are absolutely right. It is very similar instrument, so it is very much like a bond, but under Sharia law. And,
Yeah.
and the main center actually is not in Malaysia or Indonesia. The main center of Sukuk issuance is here in the Gulf.
Is here
Is
these
here
days,
in
but I
the
think
Gulf.
the original, the early days. I mean, it's only 35 years ago. Let's face it. But
And actually, Sukuk market is one of the fastest growing part of global financial market, and the size is already close to $1 trillion.
mm, that's that's just a staggering level of cash of money. I guess you're watching the Sukuk market pretty closely since you've been headquartered here in Dubai. Since you moved to Dubai, what 3 years ago you came to the UAE?
Yeah, 3 years ago.
Yeah. Okay. And is the Sukuk market a major part of the business now for you here?
No, still, as we are
Still the
global
bond
cover,
market.
we cover the global market, so Sukuk is part of our coverage. We, of course, pay attention to that part of the market, but as we cover markets all over the globe, so we work with everything.
Okay. Whether it's a bond or a Sukuk, I guess a lot of people feel markets are complicated, but markets are complicated whoever you are. How do you see bonds make bond information easier to understand for regular investors or for business investors?
Again, after all, a bond is a number of different characteristics. Like you have a price of a bond, a yield of a bond, a spread of this bond to benchmark rate, duration of this bond, credit rating of this bond, financial statement of a company, all the other different characteristics. So what we do is we take this information from bond documentation, prospectus or final sheet, how it is typically called, then put it in one database that allow you to compare different bond, to search for a different bond, to see the difference between one bond and another. So it's not a rocket science actually, but it is its own instrumentarium, its own way how investors work with bond data, bond information.
It's very much about doing your research, isn't it, and understanding the topic. And I often think we talk about we talk to lots of people in financial services on this program, and it isn't rocket science as you say, but you have to spend the time. It's essentially kind of studying, isn't it, for most people, I guess.
Yeah, the principle for every investment is do your own research. Yeah,
Your due diligence
yeah,
kind of thing.
yeah.
Yeah.
So even for individual investors, it's essential when starting to make investment to do something, to do a home task, to read something, to be prepared. Otherwise, you will be staking on like in a casino, which doesn't make sense.
If you've got modest, excuse me, savings and you want some, safe, stable returns, bonds are a good option.
Definitely yes, because it's after all a fixed income instrument, so you know how much you will get back.
What should people look out for? What are the questions that you should ask yourself if you've decided, look, I have a plan to invest, and bonds is would be a part of that plan. But what should a person look out for? What questions should they ask themselves?
Well, first, time horizon. Like if you are a conventional wisdom is quite simple that you are investing. If you are investing for a long period of time, it's better to invest in equities because on the very, very long run, like if you consider 10 years, time horizons, equities are typically outperforming bonds in most cases.
Yeah.
But the shorter is a period of your investment, the more portion of your portfolio should be comprised of bonds, because the shorter is the period, the more chances that bonds will outperform equities. So if you have a kind of like you want in 5 years buy a new home and you are planning for that aim, probably it's better invest that part of your money in bonds because you will be sure about getting your return, getting your money back.
Okay. What about technology at the moment, particularly AI? One of the things about AI is the analytical, response of AI, the ability for AI to aggregate, to bring information together. I think in lots of ways it's changing the way investors discover financial instruments and analyze financial instruments. There are benefits, of course, for that. And if you're looking at bonds, I suppose AI is one way of doing it, isn't it?
Of course. Actually, recently, 2 weeks ago, we had a big conference, CBonds Fixed Income Conference here in Dubai, and one of the sections was exactly about AI solutions. And everyone is talking about AI now. Of course, what AI is really good for is about processing a big portion of data. And we at CBonds, we also use AI for analyzing bond documentation, taking info out of bond documentation. It is, to my extent, still a little bit exaggerated how AI really changed portfolio management, etc., because still it is mostly human, and it is mostly human who are taking decision. Definitely, it improves the transparency and analytical coverage because, before to write an analytical report about a company was like you need an analyst who spends, let's say, a week or maybe longer to analyze all the figures, to look at the details of a company and prepare a report. Now it can be done with AI, which means that it comes almost for free. And for example, I have friends who recently founded a startup company that is doing such things, providing analytical reports. The value of these reports are still in question, but it definitely helps you, saves you time. Because you don't need to spend 2 hours reading, you can have an AI resume of a report and make your decision if you want to invest in this instrument or not.
Yeah, well, that's what's interesting about it, I think. There is this fear that, AI is everywhere and it's going to take over the world, it's going to make decisions for us. But in the end, at the moment in particular, it can bring the information together. It can offer you a summary, and usually a pretty good summary, it has to be said. But you're still ultimately making your own decisions.
My perception of AI is exactly like this.
Yeah.
That it's safe at time. It's like a person who helps you to do something you don't want to do yourself, but then finally it is you to decide yes or no.
Yeah, and that's a really important point to make, I think, when you're making financial decisions for your future. That, you can do all the research in the world, but it's not going to make that decision. Okay, I'm going to flick that switch. I'm going to make that decision. That's absolutely down to you.
It is still your own decision.
Yeah, and it has to be that way. These days, it's far more than bonds at your company, CBonds. There's a lot more that you do, of course, and there's a lot more financial market data to cover. Data is everything. We know that. And I know that you do a great deal of research, and that's something that you offer investors, isn't it?
We do cover equities, ETFs, all other instruments. We do have what we call a research hub, so we collect research from different banks, brokers all over the world, and our subscribers have access to this research. We also produce our own analytical materials, so yes.
And how much AI do you use in doing that? I wonder.
A good question. For preparation, yes. So, like, we have a kind of template, and to bring data to this template, AI is actively used. But still, before getting to publication, there is a person who looks through.
Good to know. Confidence inspired. Let me ask you just very quickly a little bit. We've got a couple of minutes left, but can I ask a little bit about you and the company? You've built this company from the ground up over more than 20, nearly 25 years. I understand that as yet you are unfunded, so you've done everything to build this business with your own blood, sweat, tears, your own efforts. But tell me a little bit about the start to where you are today. If you were to look back at the history, and how would you describe it?
Well, actually, I was doing academical research at the university about bond market, and then I came with the idea to make such a website, bond data aggregator. Well, you mentioned that we are unfunded. That's true, but probably because we are 25 years old and I'm quite conservative and old school. So I suppose today, if I will do again the same, I think second or third year I would go to some venture fund, because it can save a lot of time.
Yeah.
Like, building it on your own funds, on your own resources, you can do it, but it is quite a long process. So probably if I will go for funding in first 3-5 years of a company, I can have a quicker start.
It would be unfair to sort of characterize it for me to say, look, it's the amount of hard work you would have to do, because it's not as though people that, accept funding or, look for funding aren't doing the hard work. That's not fair. But it's just unusual, I think, in this day and age that you have a financial entity.
Yes.
I just thought it was interesting. Look, Sergey, emerging markets, including parts of the MENA, are getting attention, much more attention, of course, every day from global investors. What is it, in your opinion, that makes these markets attractive? And also, what about the risks that, viewers of this, listeners to this, should keep in mind?
Well, yeah, absolutely right. That MENA region and Middle East is growing, and when getting here, I looked at data we have, and the size of international bonds out of Middle East grow from about $600 billion to almost $900 billion in just 5 years. So it's a 50% increase during just 5 years. And historically, these countries, Gulf countries, Middle East, was exporting capital. Like everyone in the world knows, there are a huge amount of petrodollars here in Gulf, and wealthy Gulf investors invest in the rest of the world. Now it is changing that Gulf countries, Middle East, MENA region is attracting more and more money for infrastructure development. Like every country here thinking about becoming non-oil dependent, which means you have to invest in non-oil industries. So a lot of money is coming here. And also what should be noticed, the importance of, first of all, Dubai. You